40 bill just left Treasuries this week. That's a huge tell on inflation expectations. Everyone's watching the Fed, but what about the real story? The S&P just broke 7,353.61, a key level that could signal a retest of last year's highs or lows. The MOVE index is up 2.23 points today, indicating increased volatility in bond markets. This is not something to be taken lightly. Intel just surged 2.43% on the back of an upgraded earnings forecast. That's a big catalyst for the semiconductor sector. But what about Nvidia? Their chip sales are slowing down significantly. That's a red flag for the entire tech industry. The VIX is still hovering around 18, but that's not enough to justify this level of fear in the market. Something else is driving the narrative here. Let me tell you what, the CPI numbers are due out tomorrow, and if they come in hotter than expected, we're looking at a whole new ball game. Goldman Sachs is down 1.86%, but that's not unusual given their historical correlation with Treasury yields. The real question is whether this trend will continue into next week. The SPY is still trading below its 200-day moving average, which could indicate further downside pressure on the market. But what about Tesla? Their stock price is up 2% despite a recent report of a major production delay. That's either a sign of faith in Musk's ability to overcome obstacles or a classic example of short-term thinking. The 10-year Treasury yield just hit 4.67%, and that's going to have a direct impact on the entire fixed income market. This is not something to be taken lightly. 40 bill leaving Treasuries this week tells me one thing: smart money is moving very differently right now. That's all for today. Subscribe before tomorrow's opening bell.